What do you expect from that budget tomorrow morning?
Well, first of all, as you've just described in the news, I think this budget is delivered against a very difficult background. I mean, the minister is faced with another tough year. You've had a tremendous increase in our government debt. I think it's almost doubled in the last 5 years. Interest payments on that debt is about 100 billion rand a year now. And we've got a situation where funding that deficit is becoming more difficult because international investors have grown impatient with countries that run large budget deficits like South Africa. So the minister is faced with, again, trying to exercise fiscal discipline and try and prove to international investors that he can reduce that budget deficit and reverse the ever-increasing debt to GDP ratio, that is debt to our national income ratio of the country. I think that is very important for investors if the minister can succeed in convincing them that we are still on a sustainable fiscal path.
Now, you talk about 4 specific areas for the South African investor or even investors abroad. What are those 4 specific areas that you're referring to?
Well, the first thing is if you look at a budget, it is about the spending, because that's the main reason we have a budget, is because government's got a role in the economy and it's got certain functions that it must fulfill. If we look at the spending side of it, then the other side comes up. How are you going to finance that? Within that, you have a choice between taxes and borrowing. And as I've said, we've probably run out of space in terms of increasing our borrowings. So we're now faced with a very difficult situation that in order to maintain that budget deficit and try and reduce it, you've either got to increase taxes or you've got to try and cut your spending. And if you look at the state of the local economy, I don't think there's any chance of increasing the taxes, as was mentioned in your news earlier as well. Mm-hmm. This economy is not growing at much more than 2%. And if we're going to see an increase in taxes, which is the one important area of the budget, then we run the risk of not even getting that extra revenue in that the minister might be planning, because higher taxes could cause lower growth and therefore even less growth in government revenue. So that's a very important part for investors to look at. Mm-hmm. Then the other one is looking at government spending, and particularly important for South Africa is looking at the mix between government spending. As we all know, we have a huge shortfall in our infrastructure in South Africa, and government's got a major role to play in providing that infrastructure. And the minister has been attempting over the last few years to switch spending from other types of spending, like current spending on wages and salaries and subsidies and grants, more towards funding capital expenditure on infrastructure. And one will have to see whether that is happening. If it can succeed in doing that, that obviously increases the long-term growth potential of the economy and therefore makes it more exciting for investors in South Africa.
Now, you did indicate that you don't foresee any taxes or increase in taxes, but it is an election here, and that could also be a critical point where government do not hike taxes. Would you agree with that?
No, very definitely. I think this is a situation that, looking at an election year, the minister wouldn't want to increase taxes. He would probably want to illustrate that there would be some relief in certain areas. I think if at the end of the day, if you add up the relief, which probably would be, making some adjustment for higher inflation for those that pay income tax at the middle and lower income levels. But if you add up that relief, it won't add up to much in terms of the total budget. However, I don't think that being an election year is as important as the fact that the economy is very weak and therefore can't, I think, stomach any major tax increases either.
Mm-hmm. Now, but talking about raising taxes, we've seen the MPC increase the rate hike by 50 basis points, and we also have seen over the significant in the past months, a couple of things that's happening with challenges in the country's growth prospects. Talk to us about that. Do you foresee that the minister will talk to those particular challenges that we foresee? And you've also mentioned, of course, infrastructure spending, which is quite important.
No, I think the minister will very definitely mention the fact, first of all, that we are struggling with economic growth in South Africa, and he'll probably give us the reasons for that. But then very importantly, if we look at the labour situation of South Africa, particularly on our mines, I think the Minister and certainly the Governor of the Central Bank has been very vocal in terms of the negative impact that has in the shorter term, in terms of less income for those that work on the mines, less income for the mines themselves, therefore less spending, less economic activity and less investment. So in the short run, that's got a very negative impact on the economy. But also longer term, I think the perceptions of foreigners looking at South Africa, and they've already got very negative perceptions about our labour market, and these strikes reinforce that. So I certainly think from that point of view, that puts a dampener on growth. And then on top of that, because of the tremendous pressure that we've seen on the rand, partly because of the huge deficits that we have to finance, of which the budget deficit is one, the central bank has been forced to hike interest rates because inflation is threatening to increase to well above their target range, the top end 6%, and stay there. And I think importantly, what the central bank is faced with is the dilemma that as the rand weakens, that inflationary expectations increase. That's what you and I expect inflation is likely to be tomorrow, and therefore adjust our spending patterns to that, and in that way cause more inflation. I think that is another risk that the central bank was trying to fight. And they were forced to hike interest rates by 0.5%. I think if you look at these conditions, there could be further interest rate hikes. But then again, these interest rate hikes come on the back of an economy where the consumer is really struggling. And that is also going to be negative news, looking certainly at the prospects for 2014. I think the good news is that should put some upside limit on how much the central bank can increase interest rates under these circumstances.
Now, South Africa's growth average between 2 and probably 3%, if we look at it over the past number of years, a couple of years, which is, of course, far below that target of 5 to 6%. What do you think we need to do to change and realize this particular target, or is inflation target the way to go?
I think the inflation target in terms of being 3 to 6% is appropriate for South Africa. I don't think increasing the range, the upper end of the range, will do anything to our longer term growth potential in South Africa. If you look at that number that you mentioned in terms of our growth potential, I think that's correct. Unfortunately, that reflects a situation where, if you look at our labour force, we need to do things to improve the productivity of our labour force. So certainly our whole effort in terms of education and training in South Africa need to be improved. Because ultimately, at the end of the day, your longer term growth prospects for this country will determine on how many people we can get into jobs in South Africa, but then importantly, how productive they are in those jobs. So I think those things are important. And then also, when looking at the budget, to realize those growth numbers and to get it up above 3% to the 4 and 5% region, we do need foreign capital. We've got a huge shortfall of savings in South Africa, and there's nothing much we can do to that in the shorter term. So we need the foreign capital, and this budget can play an important role in ensuring that foreigners remain confident about South Africa, that we're on a fiscal path that is sustainable, and therefore put us in a much better position to attract the foreign capital needed to up our longer term growth potential.
Now, Dave, South Africa is becoming somewhat of a welfare state due to an ever-growing number of state grant dependents. Do you expect any major announcements in this area, and is it a sustainable practice for our country?
Well, if we look at the welfare grant system, it's widely praised in many circles as has achieved a lot in terms of poverty alleviation. We've seen a tremendous escalation of the numbers of people that are now, receiving these grants. But it looks as if that is coming to an end. It's important that I think if you look at welfare spending, that the focus will probably shift more towards the National Health Initiative rather than increasing the scope of the grants. And to make these grants sustainable, thus far they do appear to be sustainable, but it's important that we not forever increase the number of people that are eligible for these grants. And then also very important that the increases in these grants are kept to more or less the inflation rate and are not escalated well beyond the inflation rate, because I think then we run the risk that the whole grant system in South Africa becomes totally unaffordable.
Dave Mohr, thank you so much for your time.